With Fox Business's Nicole Petalides, we've got Jerry Willis, we've got market watcher Jeff Saut with us as well. Jeff, begin with you on this idea that the agenda is sound, the market hiccups notwithstanding. Everyone calm down. Things are going to get done. The Kentucky governor says it. He believes the president will deliver on it. Do you?
Yeah, I do believe it. You know, Alan Dershowitz told us 6, 7, 8 weeks ago that no matter how much they dug, they would not find collusion between the president and Russia. And I think the same is going to happen with this obstruction of justice investigation, if you will. I think the markets have transitioned to an earnings-driven market. Earnings are coming in better than most people think, and people are underinvested. So I think even if you get a pullback here, I think the market goes substantially higher. And
Nicole, as you've been reporting in your updates here, we are still up a lot since Donald Trump was elected, still up a lot since his inauguration. Are any of them getting concerned that for no reason at all other than just gravity, the markets have to correct, and this might be that time?
Look, I mean, everybody knows the markets don't just go one way. To your point, Neil, the Dow is up 16.5% since Trump was elected in November. That being said, we're at records. Isn't it okay to take a little off the table? That's the idea behind it. Technology in particular that has really led the NASDAQ and the S&P 500 to these new levels that we've seen. I will say there are eyes on Washington all the time and what's going to happen. So yesterday, a little spooked on a hawkish Fed. Today, watching obviously more on Special Counsel Mueller and what comes from that. And does Trump's agenda get delayed a little bit? But big picture, people are still feeling good enough about the rest of the year. They're watching the economic reports and that 10-year bond yield, which has been a little unfavorable lately.
Yeah, in fact, it was in and out of record lows for the year. You know, Jerry Willis, one of the things we've gotten into, and I know you've been covering the healthcare revamp very, very closely, is that if that is delayed, so much is attached to it, and including the tax cuts, that maybe the markets then might realize. But I've heard from others who say, well, even if it's pushed to the next year, Neil, hope springs eternal. Where do you stand on this? What are you hearing?
Well, look, you know, everybody talks about a July 4th deadline right now, right? But the reality is this. Every time one of these states announces that they're not going to have any insurers for 2018, that puts another amount of stress on these lawmakers to come across with some kind of bill in the Senate for health care reform. So you can't underestimate that. I think they feel a lot of pressure to get something done. Will they make July 4th? Who knows? But I think there is an incentive to move forward. And they've really got every senator, I have to tell you, working on this. The Budget Committee, Finance,
no, you're right about
healthcare.
Beneath the surface, that is going on. It hasn't stopped. Jeff, do you get a sense then that what's propelling this market might not have anything, to your earlier point about what's going on in Washington, but more about fundamentals that look good, earnings that look good, the paucity of stocks, as Charlie Gasparino reports, half them were there back in the early 80s, so that the demand is there for the supply that is not what it was?
That's exactly right. And the big pension funds and endowment funds, like the largest pension fund in the world, Norway's pension fund, almost $1 trillion. About 6, 7 months ago, they said the only way they can hit their mandated returns is to increase their equities holdings from 60% of the portfolio to 70% of the portfolio. And I think it's dawning on investors and professional money managers that that's the only game in town. You can't get to those mandates in fixed income.
All right, guys, thank you all very, very much.